Hello, it's Richard Wilson. I'm coming to you from Geneva, Switzerland. I'm standing in front of the United Nations building here. And I just got done speaking on family offices at a local private equity conference. There's about 600 or 700 people there. And we were talking about the changes in the LP landscape. So what's changing on the private equity investor landscape? And there were several themes that came out. One was geographical focus. Lots of places get very hot and see a ton of investment activity and then drop off. You know, Turkey earlier this year is getting a lot of allocations. Brazil in 2010, 2011, and before that, a lot of money coming in. Places like China, obviously, and India in the past have been hot spots for foreign investment activity. And we had interesting discussions over if you meet with one pension fund or one endowment fund, they might say, oh yeah, we love China, we think China's very hot. But that same day, you can meet with two other sophisticated family offices, institutional consultants, and they say, yeah, China's overheated, it's crashing, it's going down. So one thing is, don't believe it too much when you hear from one person, no matter how credible they are. You know, unless you're living there and you have a lot of intimate knowledge of the local marketplace, you know, I wouldn't believe anyone's opinion too much unless it's your own, based on real facts and real first-hand experience of leading indicators of what's happening in a region. Second, one thing we talked about was how it's easy to see what countries were overheated now, and you know, quote-unquote easy to see that because everyone says it, and it's the journalists you see, you know, ragging on certain geographies that they say, oh, that's overcooked. But it's a lot harder to see what countries are up and coming, and the ones that aren't overheated yet but are great to invest in. And of course it's harder because hindsight, you know, we always have 20/20 vision in hindsight, and you know, if we were all experts on foreseeing what country would be the next hot country to invest in, we would all just buy indexes for different stock markets, etc., and be sitting on a beach somewhere with an umbrella in our drink. So I think it is very hard to predict what is the next couple of hot areas to invest in. But some names that were mentioned is Malaysia, Indonesia, the Southeast Asia area in general is an area that selectively in a few countries people say had gotten too much attention, but overall I think is kind of untapped. And Africa is something that came up several times as being an area, Turkey to some degree, Eastern Europe, Mongolia, etc. So those are some of the areas that came up. Other than that, we talked about strategies that are in high demand, and this changes based on the type of investor, where they are globally, but I think forever it'll be hard to find excellent, well-established, but not too big, lower middle market funds. And right now, with the natural gas boom in North America, I would say commodity energy groups were another group that came up as a consensus of types of strategies people are looking for in private equity. Besides that, we talked about pressure on fees and how there'll always be a pressure on private equity fund manager fees, but that really the investor just wants to see the operating budget of the private equity fund manager to make sure management fees are just meeting their basic costs. Nobody's getting a huge bonus, nobody's getting retained earnings and a huge profit throughput just from the management fee. That comes from the performance fees, the carried interest, the upside on the private equity fund as well. So that was an important point. And at a previous meeting with an LP investor, I heard that if the private equity fund doesn't provide them with an operating budget, they'll make up their own guess at what it might be and then negotiate hard against that budget they just made up themselves as an investor. So it's important if you're a private equity fund manager, no matter how small you are, to have your operating budget, know your numbers, and when you go into a meeting, know your numbers, know your stuff, and bring it with you so that you're prepared when you meet a potential investor. The last thing that came up was just in general how the industry is growing. It's thriving globally. There's lots of funds focused on Africa now, lots of funds focused on Southeast Asia, lots of funds that have connections to Russia and Eastern Europe. Sure, there's not as many as US and Western Europe, or Latin America even, but it is growing, and I think that it's a good sign that the industry is becoming so global, because it means that eventually the industry will be so mature, it'll be like the computer industry, the automotive industry. You know, it's not just in a couple areas. It's like investment banking. Investment banking is growing in other developing countries, and we need those markets to mature to create a healthy, balanced private equity industry. Otherwise, if the US and Western Europe go into a depression, of course that's going to hurt the whole industry no matter what, but if that's where the whole private equity industry is based, it's going to hurt us more than other industries that are more globalized. So I think it's a great thing that family offices private equity funds and hedge funds are becoming more global, so we can thrive in any type of economic environment. So those are some of the lessons I took away from the event today, so I hope you enjoy hearing about those. Please check out our resources on family offices. We're at PrivateEquity.com. It's plural, FamilyOfficesGroup.com. We're also at PrivateEquity.com. This is Richard Wilson coming to you from Geneva, and I'll see you again soon.